There is an entire banking industry that 99% of the population doesn't even know exists. A world where banks don't compete for your salary account, they compete for the client's worth of millions of dollars. They don't advertise on TV, they don't offer cashback cards. In fact, the most people will go through their entire life without hearing about their names. Yet these banks quietly manage the wealth of the billionaires, business families, celebrities, and royalty. So, why are these so secretive and what exactly they do that ordinary banks can't? I became curious about these exact questions while researching about why Swiss private bank J. Safra Sarasin acquired a majority stake in Saxo Bank. That curiosity took me to the deeper into the fascinating world of private banking, and today I am taking you with me. But before that, I want you to imagine a scenario where you win a 50 million euro lottery tomorrow. You open your banking app, see that massive amount lying in your bank account, and you think, perfect, I will invest it and sit back and enjoy my life. Honestly, that is what 99% of the people think, but reality is very different. Once you have that much of money in your bank account, your biggest challenge is no longer making money. It would be protecting it. That curiosity took me deep into the fascinating world of private banking, and today I am taking you with me. But before that, I want you to imagine a scenario where you win a 50 million euro lottery tomorrow. You open your banking app, see the massive amount lying in your bank account, and you think, perfect, I will just invest it and sit back and enjoy my life. Honestly, that is what 99% of the people think, but reality is very different. Once you have that much of money in your bank account, your biggest challenge is no longer making money. It would be protecting it. When you have 50 million euro, you face 5 hidden risks that normal banking simply not built to handle. Problem number 1, concentration risk. One bad move can cost you millions. Let's say you took that 50 million euro and buy a luxury apartment in Dubai. Sounds like a solid plan, right? But what if the Dubai's property market crashes? What if the new regulation hurt foreign buyers? Or what if you suddenly need cash but your money locked up in the bricks and mortars? One bad decision can wipe out your generation of wealth. Private banks prevent this through asset allocation. They don't just pick a property, they look at the big picture and balancing real estate, stock, bonds, and cash. So your life isn't dependent on a single country or a single market. Problem number 2, inflation risk, the silent wealth killer. You might think, fine, I will keep the 50 million euro in a regular saving account, it's safe there. Except it isn't. While the numbers on the screen stay the same, inflation silently eats away its purchasing power. Year after year, the question changed from how do I protect my money to how do I protect its value. Private banks solve this with the advanced cash management, ensuring your liquidity outpaces inflation without taking reckless risks. Problem number 3, tax and currency risk, cross-border chaos. So now imagine you live in a beautiful country like Denmark. You buy a property in Dubai. You invest in US stock and have family in India and want a holiday home in Spain. Your money is now touching the 5 different legal systems, currency, tax codes. If the euro, dollar, rupees moves unpredictably, or if you miscalculate a foreign tax law, you face massive financial penalties. Private banks handle cross-border wealth planning. They also have the top tier tax experts and currency specialists to ensure your or global wealth is structured legally and efficiently. Problem number 4, succession risk or family disagreements. This is one nobody likes to talk about. You have 50 million euro, you have two children, your assets spread across multiple countries. What will happen to your assets when you are gone? Who will get what? What if one child wants to sell the family business and another wants to run it? Many wealthy families don't lose their money to the stock market, but they lose it to the family conflict and poor estate planning. Private banks act as a neutral third parties, setting up wills, trust, and family governance to ensure wealth transitions smoothly to the next generation. Problem number 5, the fear of becoming poor, or you can say wealth preservation. Average people worry about becoming rich, whereas rich people worry about becoming poor again. Once you build wealth, your entire mindset shifts from the offense to defense. Private banking exists because wealth brings a completely unique set of headaches. They are basically selling elite expertise to manage those headaches. For example, wealth management helps them invest, asset allocation helps them diversify, tax planning helps them avoid expensive mistakes legally, currency management helps them deal with the money across countries, estate planning helps them transfer wealth to the next generation, and lending against asset helps them to get liquidity without selling their investments. So the private bank helps wealthy people in many multiple ways, which normal banking would never able to cater their different needs. So thinking of a private bank as a personal CFO for your life who guides you on every aspect of your financial journey. Now let's discuss the entry barrier. So now you might be wondering, this sounds fascinating, but how wealthy do you actually need to be before a private bank is interested in you? The financial industry has a simple way of classifying wealthy individuals based on their investable assets, that is, money available to invest, excluding things like primary home or personal belongings. Here is what that ladder looks like. At the bottom is the mass affluent category, followed by a high net worth individual, then very high net worth individuals, and finally ultra high net worth individuals. The higher you move up, the more personalized and sophisticated financial services become. But here is the surprising part. Even if you have $1 million to invest, which already makes you a high net worth individual, you are still relatively small for many of the world's most prestigious private banks. Banks like UBS, Julius Baer, or Safra Sarasin often focus on the clients with 10 or even hundreds of millions of dollars. And that explains something many people never notice. You have probably seen advertisement for retail banks. Maybe you have seen ads for the investment app credit cards. But have you ever seen a television commercial for a private bank? Probably not. That is because the banks aren't trying to attract millions of customers. They only need a relatively small number of ultra wealthy clients. Thanks for watching, and I will see you in the next video. Thank you.